Hi, everybody. This is the investing teacher, high school science teacher, teaching others how to invest. In this video, I want to go over the second stimulus package that will very likely be approved, what options you could do with your money. I'm going to do some of these beginner strategies and then one a little bit more advanced. And let's get right to it. Okay, first for beginners, just those starting out, I would recommend leaving this money in a savings account. If you don't have a lot of money invested, if you don't have much money saved, leave it in a savings account, even though it earns about 0.5% per year. It's something that could be a cushion, especially if your job is not completely stable. Another option that you could consider is to pay off any high interest debt. So if you have any credit cards with 20+% interest rate, putting in the $600 that you'll be receiving would be a good value of your money. If you take $600 and then you take 20% off of it, just multiply that out. 600 times 0.2, you get $120. That's how much money you could save in interest in 1 year. So again, if you have high interest credit card debt, I would do that and possibly leave it in a savings account if your job is not very stable. Okay, now let's say that you have a pretty steady job as a teacher. It's relatively steady right now. And let's say you have adequate savings and you also have no credit card or high interest debt. At that point, I would invest in a Roth IRA. You could still put in a Roth IRA for 2020, and you actually have until April 15th to do so. So that would be useful if you wanted to start out your investing journey. If you already have a Roth IRA, I would recommend putting it in there. And you have by the end of April of next year to max out for 2020. And the stimulus check should be in before that for most Americans. Putting money into retirement for long term, if this is money you don't need, I'd recommend doing that. If you're a beginner, I would recommend putting it in total stock market index like VTI, where they invest a few pennies in pretty much every company in the US. Okay? You could also consider a target retirement fund, where if you wanted to automatically be a little bit more conservative as you get older and put more percentages into bonds, just figure out the year that you're planning on retiring and buy the target retirement for that particular fund. Two more slightly more advanced strategies that you could do with this funds is one, invest in a gold ETF like IAU ticket symbol. The US is going to be printing out over $1 trillion again, and the dollar value is starting to decrease quite a bit compared to other countries in the world. We are printing money like it's just coming out from a tree. So investing in gold might be a good consideration as a hedge for any big inflation or us continuing to be doing the same monetary policy. Another more advanced strategy would be to leave it in a brokerage or a Roth IRA and sell cash secured puts on a certain underlying stock. Now, for $600, there's not really many options you could do because you'd have to look at stocks that are $6 or less. But if you could add this to any existing positions, there's a few fairly conservative ways you could go, like XLF, which is a ETF on banking stocks that goes for about 28, so that'll be $2,800. For some of the smaller positions could be, for instance, Mara, which is a Bitcoin mining. I did do a cash secured put on that recently, and I only needed to put about $400 on it, but now the stock went up quite a bit to around 8 or 9. So you can still sell a cash secured put at 6 and then earn about 1% every 2 weeks or so with a fairly conservative position, because the stock's at 9, you could sell it at 6 in about a week or two and then earn a pretty decent premium for it. So that's a little bit more of an advanced strategy. Just to sum up again, if you have a lot of high interest credit card debt, pay that off first. If you're pretty low on savings, I'll just leave it in a savings account. If you have a Roth IRA and you don't have much debt, any high interest debt, put in a Roth IRA. And you could put it just in a total stock market index or international fund. And you could consider looking at cash secured puts for any positions that you might be interested in buying, but you think the share price is a little bit too high right now, and you want to earn a fairly decent return in the short term. Again, I'm the investing teacher, high school science teacher, teaching others how to invest. Like, subscribe, smash all that good stuff. Leave any comments down below. I read all comments and will respond. And hope you guys have a great day.